Yeah, everyone, very good morning. I hope you're well. Sorry the 15 minutes late. That did me the world of good to wake up slightly later. But nevertheless, we are here now. So Friday the 24th of July, 2026. Let's have a look to see what's going on. So ordinarily I would call this Fun Coupon Friday, but after analysis of the day, I think it could well be one of those days where price doesn't want to pull back for the favored type of positions, for such as yesterday, to be honest. There were a couple positions on the market where really we were anticipating in the correct direction. We just wanted to seek some extra confirmation by way of breaks of structure, pullbacks into points of interest, and then we could have taken those positions slightly aggressively, or then we could have like waited for those lower time frame breaks of structure in the 1 minute just for that confirmation, the extra cherry on top of the cake before looking to take the position. However, it just wasn't to be. It was a day of waiting for the pullbacks and no pullbacks arose. So the first thing I'll go over is even EU, for example. We were very correct in the sense where we understood we were in a potential range. There was a 4 hour point of interest. I was quite hesitant to take that short position. And I think I was quite, even though you see price move in your direction, you have to give yourself sometimes a chance to understand, well, actually, it potentially wasn't a risk worth taking. I disclosed I thought we were in a daily range on EU, therefore taking a position short within the middle of range is probably not the best thing that you'd be wanting to do. So we're just waiting for that added confirmation on that position before looking to go short. And then price broke structure points that we thought was a potential structure point. As you can see on the top left-hand chart, 50-minute price just did not want to come back. And off it went to fill the lows of the range. It was certainly correct in regards to our understanding of the range. So we start with that now today. Have a look at the weekly time frame. Again, clear range bound market. So if we're up at these highs, I would really expect price to want to start to gravitate a little bit higher, in all honesty. However, in hindsight, what I could have done is understood, well, 15-minute structure was definitely on side towards the downside, and therefore potentially as opposing to the range looking to fill the highs. And of course, from that area, the range could well have then filled the lows. Nevertheless, structure point in the market after coming into a nice point of interest, looking for that solid break of structure, and price just simply didn't pull back. So it's just one of those, to be honest. And now here we are today, range again, bottom of the range. So therefore, we're in a good position to look to take price towards the upside. In terms of 4 hour 50 MA, there is definitely range towards that upside, but as you can see, the 4 hour 50 MA cannot really be relied upon. So as it's the last trading day of, or last trading day of the week, of course, we're looking to gravitate towards those higher time frame 50 EMAs, such as daily, such as the weekly, before looking for that anticipation of rejection from those higher time frame EMAs. So we can, at the moment, clearly see that we're in a range, we're at the lows of the range, and that's pretty much where we want to be in terms of taking a range position. So what am I looking to do to attack that? So at the moment, I can see we're not trading from any order blocks that would be within that range. And so what I'm going to need to do is await for some solid breaks of structure, unfortunately, because I understand that a range, as we've seen, those wicks below the range, that is people anticipating that price is, of course, going to just move off from the bottom of the range. We're having price break out of the range, break back in, and all we're waiting for is solid confirmation to not necessarily be in that position first, but still take advantage of that position. So the first thing I'm looking to do is isolate a place in the market where structure, in my opinion, just seems to have a little bit of formation. So I could either look to place this just here, or I can look to be a little bit more conservative and place it slightly higher. What I will do is show you this on the lower time frame as well, just so you can see how it can make sense. So initially, I'm placing a structure point here. If I clone that, I'll have it slightly higher. And then you guys know me, I'll be looking for that to be broken, pull back into a point of interest, and then I'll be looking to take a short. What I like this structure point is there's very much so a clear 15-minute order block to the downside. So therefore, if I'm incorrect about the range today, my anticipation is that we'd be looking to reject this area. If we don't reject that area and we break back through that area towards the upside, then of course that is the structure point identified, structure point broken, and then I'll be looking for a pullback, but look to take price towards the upside. So EU, it's a very simple breakdown, to be quite honest, in regards to if the range is holding correctly. And what I can see, certainly looking like a nice daily range now, down at those lows, looking for the rejection towards the upside. The upside, however, we're not going to be complacent and understand that, okay, although I am going to be trading a range, I'm potentially going to be holding that towards all the way back up the highs. Of course, in practice, it sounds fantastic to want to do so, but in, let's say, reality, it's well, you just don't know, do you? So therefore, your comfortable risk to reward ratio, i.e., for me personally, it's a 1 to 3. Once I do get a 1 to 3, particularly in a range, I'm happy to say, well, that's job done. It's not necessarily going to be me that's going to hold that position up to those highs. If we have those continuous breaks of structures and pulls back, then potentially it's something that I might well be looking to execute on the way up, as I was looking to potentially execute this on the way down. However, I do need that structure break and pull back into a point of interest before looking to take continued long positions, just as I wanted to have a continued short position from those highs. So that wasn't to be, but nevertheless, the thought process is there. We understand exactly what needs to be done, and we continue to execute in line with our strategy. Of course, sometimes aggressive positions are available, but I believe there is a clear time and a place when to be aggressive. So that's my initial thought process on EU today. What we can see as well, I've already mentioned the EMAs towards the upside, where we'd of course be looking to reject to the downside in terms of that daily. So I think we've got very good range back up to that daily. So if you are an optimistic trader and then wanted to hold that all the way back up to the range, there's really no problem in doing so. It's how you feel comfortable to do. So at the moment, structure points, as I've said, I'll go down to the 5 minutes so you can see how that makes sense on the 5 minutes as well. So of course, we're looking to see on the 5 minute what caused a most recent low in the market. So we can say from here, a low is being created. Also from here, after that low, lower high, here's a lower low. So as we said on the 15-minute time frame, what looks like a structure point. Therefore, we want that evidence to be quite solidified. Therefore, we'll go down to lower time frames, and I think we can see it quite clearly. With that said, there would have been an order block just here on the 5 that caused that break or structure like so. That order block was then respected. We came back into the area. Therefore, here is a clear point of interest on the 5 minute in terms of lower low, lower high. And then you can see we have broken that already on the 5 minute towards the upside. However, not looking to take that as an aggressive position on the 5 minute. What makes more sense to me is understand what happened on the 15 minute. And you can see on the 15, we haven't closed above that area. Therefore, for me, we do not have a break of structure just yet on the 15-minute time frame. Of course, as an aggressive trader, what you'd be looking to do is identify that break of structure. If you are going to go down to those time frames, you could do it on the 5 minute. Why not? You could say, well, we've had a break of structure on the 5 minute time frame in terms of the aggressive position. Has that 5 minute left me with an order block behind that I can say clearly say has contributed to that break of structure? So I'll be looking to the left here already, and I'll be doing something like so. That's not available, move across. That's not available, move across. This one here has already been mitigated as well. And you continue to do that process across and across and across. However, the higher you go, the more risky it then becomes, because you can understand down at the lows on the 1 minute time frame, there's more than likely going to be a 1 minute time frame down at these areas as well. So with that said, the way that I gain the confidence when in slight doubt is say, hold on a minute, let's just go back to the 15-minute time frame. What's going on the 15 minute? No clear break of structure. Therefore, I will wait for that break, wait to identify a 15-minute order block, and then we'll go from there. So that's what I have at the moment for EU. Happy to take a long position, but as I said, need that break of structure toward the upside, pull back into a point of interest that caused that break of structure, and then off we go to take a potential range trade towards the upside on EU. Cool. So let's go to the standard type of thing, DXY. Where are we today if it's going to load? Again, very similar to EU. DXY, bit of a range with the, well, certainly with the daily time frame, you can absolutely see it. However, what was identified, just like on EU, but in the flip side, we had a 4-hour order block and price respected it beautifully. As well as that, that 4-hour 50 EMA was also respected, and we dipped into that area and we pushed off beautifully towards the upside. Now, when we refine that area down, there was a couple of 15-minute points of interest, and actually this broke structure to the downside, in my opinion. So then I was a little bit hesitant, to be honest, to identify whether the DXY was going to be strong. My mindset was then, well, after a low, potential lower high for a lower low continuation to potentially drive price slightly lower into that 4-hour order block, or even more than that, just drive price slightly lower back down into the range. It wasn't to be. Price just absolutely took off. And as you can see by the lack of pullback on the DXY, that is also why we had a lack of a pullback on GU, EU, and AU, unfortunately, which is quite annoying. But nevertheless, so what's gone on now at the moment? So on that daily time frame, it's no coincidence that the daily candle, if we zoom across, didn't close above. So therefore, are we now in a range potentially on the DXY? There's every reason to believe so. If we have a look at the weekly time frame as well, that week, those weekly candles also are still in the range. A current weekly candle rather is still in the range. So I've got ample reason to expect DXY rejection from current area or this current point of interest at the moment today. So I'll move that across. I understand I could well be in a range as well. And supporting the fact that I'm in a range is that, well, after, let's say, a high, I would naturally be expecting a higher low before a potential higher high continuation. So there is reason to understand why price could want to move towards the downside from that area. And then with that said, the question is, well, where would you expect price to move back down to? Before our 50 EMA, if we're wrong about the range, and then we'd be looking for price to push slightly higher. With that said, and in addition, we're still within a daily order block that price is failing to close above. Again, it's not a coincidence. That's what the order block is on the chart to do, and that's why we expect to take price to the downside from that particular area. So we do have good conflict to well, good reason rather, it's not even a conflict, good reason in favor of continued shorts from that area. And in terms of the daily time frame, I am still short biased on that daily time frame until we get a bullish candle on the daily time frame closing above that daily order block to then tell me, hey Charles, you shouldn't really be using that daily order block anymore. Price has shown what it wants to do. It wants to break above. And then of course, once there's the break above, I'll then be looking for the high, the higher low for that higher high continuation. At the moment, we don't have that, so I have to continue to move with what the daily time frame is telling me, and the daily order block is giving me that order block towards the downside. In addition to looking for a short position, what we can then also say is, well, this is a low in the market created. Let's just play devil's advocate and say, well, we could be wrong about the range, but how can we support a potential short position from current position on the chart? We can say, well, after a low, I am looking for a lower high before a lower low continuation. With that said, for me, it's it's not really the best confluence to add to the cake in order to support the short because we have now broken above. What I was looking to do is isolate this point in the market yesterday and then look for that DXY rejection towards the downside to potentially take a position on GU, which I did, but I had to manage that very, very, very aggressively because it was an aggressive position in essence anyway. So point of interest. and what's my plan today. So we can see that up at the highs of this range, we do have that 15-minute order block that price is already respecting. So what I'll be looking to understand is, well, can we get a bit more of reaction from that area? So this 4 hour order block is to the left-hand side, and that has been broken and closed above, has it? Let's move it slightly higher. Could that well be a session high in the market? Let's see. Yeah, we've certainly broken above that, so we'll move that along. So in terms of price action, we have indeed actually made a higher high, but in terms of the daily, we're just still active within that range. So there is a little bit of conflict on the market today, but after the higher high, as we said, expect the higher low in terms of the range on the daily time frame. We're expecting to move towards the downside. So we do have good confidence. We expect a short move down to the 4 hour 50 MA before the potential rejection. And we do have that 4 hour order block now left behind. So if I move that to the left, put another 4 hour order block in just to give us reason to manage the position by there, then we can see 4 hour order block made a high, 4 hour order block supported to the upside by the 4 hour 50 MA after a high, higher low, higher high continuation. So there's evidence to support a short position down on the DXY. There's also evidence to understand why we could look to move further towards the upside, also from this point of interest. So that's the thought process at the moment, team. So the DXY, of course, it's just a confluence, but still we try to understand how it's moving by applying our own strategy to it. Now, the first thing I'm seeing here, just like on the previous pair discussed, just by eyesight, looking at here as a structure point in the market. And for whatever reason, we've wicked down, we haven't broken below. So I'm going to call it what I believe it is, and that's a structure point. I'm also going to add a conservative structure point on the market as well, because it is a range, in my opinion, and I'd want that extra security if I'm able to see it happen. Not necessarily that I'd be waiting for that. However, if it happens, I now understand why my reasoning for looking for a short position. Here is an order block in the upward direction where I would expect price to respect it towards the upside. So therefore, if I get a break below it, I'll be waiting for price to pull back to the order block that caused that break of structure. And then I will indeed expect continued DXY weakness from that area. In the immediacy, because I know I'm using the DXY as a confluence, I'm not particularly looking to trade it. I can gain confidence by awaiting this break of structure and then look for additional confluence on the position that I'm already looking to trade in the upward direction, let's say AU, EU, or GU, or even then US dollar CAD short. So with that said, looking at the DXY, it looks as if there could well be then some immediate looking positions, let's say towards the upside, which would be EU, GU, and AU longs. And then you could also have in the bag that there could be an immediate position looking like likely to form, let's say, on US dollar CAD short. So let's have a look at those. We can understand that as a result of price action, even on the DXY, how bullish it was, and what type of positions are there going to be? I'll ask it rhetorically. Of course, there's no one else here with me, but what kind of positions? These are the type of things I'm already asking myself. If the DXY looks as if there could be some aggressive breaks of structures, perhaps for a pullback short, after this very bullish move in the market. Now, I recognize that if I forget about all of the higher time frame analysis and just understand what has gone on from this point to this point, we are very, let's say, exponentially bullish on the DXY, meaning that any short positions potentially on the DXY could be what? A reversal type of position. So with a reversal type of position identified potentially on the DXY, I'm also expecting to see when I go down through the pairs that EU, GU, and AU in terms of long positions could also be reversal type of position. So I have to have my expectations clearly set. And with that said, taking a reversal position is not always my desired type of position. With that said, what it also suggests as well, if there are order blocks towards the upside in terms of um, areas that I would foresee to be broken or I would need to be broken to take a short position, let's say on the DXY, that's telling me that I could indeed just trade alongside the DXY, either from those 15-minute points of interest, like here, or, of course, allow the reversal positions to move without me and just wait for the higher time frame points of interest to look for taking a position that, let's say, would make more sense and would have, in my opinion, more statistical backing in terms of, well, my higher time frame directional trading is a very solid criteria. In terms of my 15-minute price action only, it's a very solid criteria, but I need to be trading alongside, of course, that 15-minute time frame. So therefore, it's telling me if I want to trade alongside the 15-minute time frame here on the DXY, I'll be looking to take long positions. Then if I want to also trade alongside my higher time frame directional positions, more than likely I'll be taking long positions from the low. So it's just gauging what to expect across the other pairs and understanding what type of position that you'll be looking to take. So let's have a look at AU. AU's a bit of a shame, to be honest. We came into that, well, that's the reason why it is a shame. Yesterday, you remember, I made this 15-minute order block slightly larger in order to hope that price would actually tap into it. Now, the fact that price didn't tap into it and then gave the move towards the downside, it only kind of made me want to wait even more because if I'm already stretching an order block, because technically that order block is up at these highs, I stretched it slightly lower, top left-hand chart, 15-minute, and we still didn't tap it. So therefore, when I was seeing price move towards the downside, even while we were on the call yesterday, I honestly thought that price was just going to come back after that high for taking out these most recent highs, high, higher low, higher high in, lower time frame break of structure, pull back, and off we go. So really that was my thought process yesterday on AU. So it was a bit of a shame to see it move towards the downside. Nevertheless, where are we on the weekly time frame? So it's a bit unfortunate. We are in that weekly, we won't call it unfortunate. We're in the weekly order block looking to take price higher. We've had a couple of really nice pushes out of that weekly order block. Then once we refine that weekly order block down, we can see also that it's supported to the highs by way of that weekly 50 MA. That potentially that could well be an area where price will look to gravitate towards today before looking for that rejection. Bear in mind, we are on the same time span, daily and weekly time frame today. 16 hours, 21 minutes for the weekly to close, 16 hours, 21 minutes for the daily to close. So what we can expect is a rejection from the daily, rejection from the weekly, and that is pretty much, in my opinion, the trading range. And that's why my Fridays have become quite the solid trading day because the EMAs, they are two of the EMAs of the higher time frame. They then become quite dynamic in terms of support because you recognize, well, both of those higher time frame 50 EMAs are closing today. And their time is running out. So the time for rejection, we're no longer looking at a couple of days. We're now understanding that that weekly 50 MA is going to be closing today alongside the daily. So it can become quite dynamic. Anyhow, weekly order block towards the upside, top bottom right hand chart. Price respected it, didn't close below it. We moved off it. Now, what I'm going to do is make this slightly smaller now because we have moved on from there, unfortunately. So there is that daily order block respected. We have another daily order block created as a result of bullish engulfing candle that took out all of those days worth of price action. So I'm going to place that on the chart and just understand, has price come back just yet? No, it hasn't. So I have reason to anticipate price wants to potentially move towards the downside for rejection, move back up towards the upside if that's going to load for us. There we go, daily order block, and we'll place that on all intervals. And of course, once you then refine that daily order block down, you can see that refined within that area. very clearly put is that daily, excuse me, 4 hour order block, a new one created as a result of some bullish pressures coming out of the market that broke structure points towards the upside. So, of course, if you're going to ask me, well, charts, what's your best position on the chart today in terms of longs? I'm going to say down at this daily order block that caused a push towards the upside and then breaking structures to the left-hand side, refine that area down. Here we are, 4 hour order block. So I understand that's not where price is at the moment, but it's definitely good to understand the better type of position. In the inverse direction, we have a daily order block caused by pretty much the same type of criteria. Bearish engulfing candle, breaking structures to the left, left us with an order block behind, and this time we're supported short by the daily 50 MA. And you can see the performance of the daily 50 MA is doing the absolute business, and we are rejecting it towards the downside. That's what we're expecting to see from a daily 50 MA. So the only caveat to that now is our range is getting smaller as price starts to step up and we're getting those higher time frame order blocks in on the chart. Nevertheless, when we refine those areas down, we still have a bit of a trading range. So that's why it's not all doom and gloom with AUD US dollar at the moment. There's still room for maneuver. So let's go and take a look at this towards, let's say, the upside first and foremost, since we've had this push towards the upside, which I will call a high in the market. After a high, will they be expecting a higher low for a potential higher high? So the reason why I've had this now in the charts, because I've put this as a key structure point, because technically price has moved on from this point of interest that we've just spoken about. I do expect a reaction from these lows, but price has moved on. We're trending towards the upside now on AU. It's very nice and it's very clear to see. So, key structure point in the market that if this area is broken, it would throw a little bit of a spanner in the works because on the 4 hour time frame, it makes sense. The only issue is we have a really large 4 hour order block. So what we want to do is refine that as low as we possibly can. So refine within that order block, you'll see it. Here is the gap fill practically. And we have a 15-minute order block at the lows of that where price had moved towards the upside and tried to recover itself. And with that 15-minute order block to perfection, we tapped into the area. So what I'll be looking to do is understand a bit more confirmation. We've got a structure pointed in the market, looking for that to be broken towards the upside. And then only at that point would I use this potential order block that's being approached at the moment. I don't think it's good enough just yet. Yes, we have come into a point of interest. However, we're very much so lower low, lower high, lower low. Here's a structure point. You could aggressively say it's broken structure, but I don't believe it has. And if it has, I really want to now see this order block do something. So I'm not late to the chart. I'm seeking confirmation before I get involved. So if this has broken structure, here's the only order block available. Do something for me. And then in London, I'm able to then come back to the market, see prices made a new high, repeat this process, or potentially the same order block would be valid. Well, it won't be valid because it's been tapped, but you look to seek confirmation from that order block, wait for a bullish engulfing candle from it, allow this process to begin again, and then potentially look to take price towards the upside. Now, what's the caveat to that? 4 hour 50 MA. It's unfortunate that we've broken below it. Therefore, my thought process is this needs to be, although we're waiting for those structural breaks, it still would be better, in my opinion, to take this as an aggressive position once price returns, because I recognize I have very minimal range back to that 4 hour 50 EMA. So in order for me to take that, as I've mentioned, in an aggressive manner, what I'll be looking to do is go down to the 1 minute time frame to understand if I can have my entry as low as I possibly can in order for me to actually move towards break even by that 4 hour 50 MA, where we have to understand the facts of the matter is we were respecting it towards the upside. Here could well be the first clue that we've broken it towards the downside. And then after a low in the market, we are, of course, looking for that lower high. The lower high could come by way of 4 hour 50 MA. in my mindset, I don't believe it is going to come from the 4-hour 50 MA. I believe price would want to gravitate slightly higher after the lower high for that lower low continuation. Therefore, my targets would be up at these highs, my same targets that I wanted price to actually reject, or yeah, of course, reject that area, give me some confirmation, and I'll take that short position from. The fact that that area is still available does excite me somewhat because that's now where I believe price would look to want to gravitate after a low on the higher time frames for that lower high. So waiting for that confirmation on the lower time frames before looking to take a long position. I understand the 4-hour 50 MA can, well, is a problem, but my thought process is, well, just manage by the 4-hour 50 MA. Just move towards break even and understand that your targets now are going to be slightly higher. Well, more than slightly. My targets would be up at these highs and then AU, so 10 to 15, even 20 is doable, but I don't think it's required. I think a 10 pip stop loss is ample, depending on where you can get your entry. But if I can at least cover this wick low, which I'll be happy, which I'll be able to do, judging by the risk reward tool, I'd be quite happy to do something along, let's say, along those lines. Just give myself a little bit of breathing room. So I think AU again, it's definitely in the mix for good trading setups. However, just those confirmations is all what I want. You can see here those structure points. We had aggressive key structure point. It was broken. Just literally waiting for price to pull back. And I would have been very aggressive on that short position, but it just wasn't to be. So we're doing the same process now. We're at a point of interest in the market. We're going to identify some breaks of structure. We want structure to be broken to the upside, pull back up into the area that caused it, and look for that long position. So I really like AU, I suppose I should say. And what's nice about it is, of course, we're trading from that higher time frame position out of a weekly order block, and we have range back in towards that daily order block where we are rejecting as well. So I don't mind that at all with AU. EU we've discussed, but for that higher time frame. But it's pretty much the same protocol. And that's why if we can understand why AU may want to move towards the upside, and AU, in my opinion, is not really in a range, could argue on the daily time frame, not a lot has gone on. In fact, from this point to the right-hand side. But the difference is, or rather the if I can get my words out, what am I looking for? The confluence being, if I expect AU to move to the highs, then of course EU also has the potential to move to the highs based on the correlation between the two. However, we're not going to blindsidedly take position. It's breaks of structures for the confluence and for the confidence, and then we look to execute from the order blocks that's given us that break of structure. So let's head to GU. Left my position on GU for us to have a look at. If I can remember exactly how I took it, looking at the chart should really be enough. So we had a structure point in the market. We were also supported to the upside by way of, it should have been a 4-hour order block. So why has that gone missing? 4-hour order block. Potentially it was just here. Let's move some of these alerts so it gives me some eye room. Okay, yeah, down at, or would have been a session low. That's why I should never get rid of my chart so early. Nevertheless, what I can see on the market was some structure points that were held towards the downside. So the better position on the 15-minute time frame only would be respecting these structure points towards the downside. So what we then had was a break of structure towards the upside. I was then looking to isolate the 15-minute order block that gave me that break of structure. We can see it just here. And then when price came back into the area, what I was looking to do was go down to the lower time frames and understand exactly what's going on. So if I scoot over to the 1-minute time frame, when we finally get there, well, it was a 5-minute first and foremost that got me excited. So we came into the 15-minute order block. Where's that 5-minute? Cool. Then into these session lows. So here would have been the 5 minute order block to the left-hand side initially, like so. Rejected it towards the upside. Let's put the illustration on. And then I was looking to see if we had some more confirmation. But what I had was because we had, oh, this is just annoying at the moment for that bit. Let's do it without. Okay, so into a 5 minute order block below the 15. I'm pretty sure there was a support by that higher time frame as well. I'll have to look through my journal, but it's going to take us far too long to go through it. Nevertheless, 15 minute order block rejected towards the upside, then a 5 minute order block below that area, waiting for the confirmations, and went down to the 1 minute time frame. And this move here was definitely a break of structure only on the 1 minute time frame. So when I was looking to then identify a place in the market to take that position, it's probably best I drew it. For some reason, that just it's not doing well with my eyes. So we're coming down like so into a valid 15 minute point of interest, just like that. Now, here's the illustration. This is a 15 minute order block. Once then we're understanding the 15 minute order block, here's that structure point in the market. So of course, without that 15 minute order block or 15 minute structure point in the market broken towards the upside, this still remains an aggressive position, i.e. here is the lower high that caused the lower low. So here is the desired position. On the way back down, or rather on the way back up, we had a refined area just below this 15 minute order block like that. Price came into the 15 minute order block, rejected it towards the upside, and gave us a wick into that 5 minute order block. Once that I then created, I went down to the 1 minute time frame, and as a result of price then moving away from that 5 minute order block, we had a 1 minute time frame break of structure, leaving us with a 1 minute order block. Now that 1 minute order block was high, or rather too high, or it was it just wasn't low enough in order for me to say, okay, wait for a significant pullback that broke structure in the 1 minute time frame. That order block was pretty much here. So as soon as we had that break of structure, the only valid order block available was that one. So the fact that price now had moved away from it, for me to wait for price to come back to that 1 minute order block, which already wasn't at the desired point of interest anyway, I set just the execution right away and had my stop loss below the area and understood that, excuse me, as soon as price moves towards the 5 minute point of interest, i.e. 5 minute structure towards the downside, I had to move that to break even. It was a bit unfortunate. But I'm glad I did so in hindsight. So that's the position in all of this melee now. So let me get rid of that so we can understand where we are today. So yeah, I wanted to do a breakdown on that, but I just didn't have the time yesterday at all. So let's have a look at the higher time frames now. Weekly to the top right-hand chart, what are we doing? So we're rejecting that weekly 50 MA. So I have all the good reason to look for a potential long position today on GU. Now, the caveat to that is I don't really see any areas to look for a long position at the moment. We have in the higher time frames weekly order block, refine that area down. We're down on the bottom right hand chart now. Daily order block. Why? It's the only daily order block that is actually available that caused that break or structure. So certainly here is an area in the market where I want to be looking to take that position from. When I then put this daily order block on all intervals, refine that area down, I have this 4 hour order block. Now, this 4 hour order block has been a while before I've analyzed GU lows, but is it the only 4 hour order block available? Yes, it is. So it's giving us good reason to look in that area. Then, with that said, here's a confusing concept which often traders struggle to understand with the EMAs. On the weekly time frame, we are trending below the weekly 50 MA. However, and we are looking very bearish in doing so. However, we know the weekly 50 MA is important only on the weekly time frame. Now, the question being is, when is that weekly 50 MA going to close in relation to the weekly candle in 16 hours and 50 minutes? And 6 minutes, excuse me, 4 minutes. So the question being is that if I take a long position, is the weekly 50 MA onside or is it against my position? What happened to the most recent weekly candle in relation to the weekly 50 MA? We rejected it to the downside, and the weekly candle closed above the weekly 50 MA. So currently, my thought process lies that if I take a long position, I have support by the weekly 50 MA towards the upside. Of course, there is always a caveat to that because as a result of trending below that weekly 50 MA, we are leaving order blocks behind on the higher time frame, such as yesterday's daily candle closed bearish below the daily 50 MA. Therefore, I'm expecting a rejection from the daily 50 MA to the downside today within the same time frame. However, I'm also expecting a rejection from the weekly 50 MA towards the upside. So my thought process is that price could close somewhere between the weekly and also well, between the weekly and the daily. So that's the thought process, meaning that if I take a long position, I have really good range up to the weekly 50 MA where I expect price to reject towards the upside, and then towards the daily 50 MA where I'm expecting the rejection towards the downside. So I hope that makes sense. Just figured that's a nice opportunity to explain that to you all. Now, moving on. Would I look at short positions first and foremost as well? So there is a daily order block just here. My question being, before I place that in on the chart, why am I going to do that? So it's a daily order block, yes, but there is further daily order blocks above. So I'm not going to put it in, but we do recognize that there is a daily 50 EMA there. So if we start to move towards the 4 hour, now it's looking very clear that we have broken structure points towards the downside, like here for good example. So now we are very clearly looking bearish on GU. So the better play in terms of 15-minute structure, in my opinion, would be looking for continued short positions. That would be fair to say. So the only caveat, well, I wouldn't call it a caveat. The only reason for a reason against continued short positions is the fact that looking at price action on the 15, we're going to have to wait potentially a considerable amount of time to actually short, even just from a 15-minute point of interest. Um, so what I'm really getting at is whether or not a reversal position is worth taking. However, at this time, because price hasn't really come into any of our higher time frame points of interest, I'm probably going to have to skip that on GU and understand why. I do understand that price is probably going to want to pull back, but it's not going to be me that's going to be in that position, unfortunately. If price does pull back, then absolutely I'll be in the market to take a short position in line with what the 4 hour is doing, in line with using the daily 50 MA potential rejection towards the downside. And then with that said, I'll have enough range to get price back down towards the weekly, where price is looking to reject for the latter stages of the day. So it's a bit unfortunate that price hasn't come into a higher time frame point of interest to really support that reversal type of position. However, if you're a sharpshooter and you'd want to do so, again, structure point in the market, it's just what I'm seeing by eyeball. Allow price to then give you an order block only once price has broken that structure point towards the upside. So again, it's not going to be me that's going to be looking to take that long position, but I can certainly see how it could develop. And you do have confidence based on the EMAs to take it. However, looking at 50-minute only, I wouldn't be taking a reversal position simply based on a 50-minute time frame. I'll definitely need to have higher time frame backing, or um, the fact that we're in a range, for example, like on EU, where you can understand why a position may well want to start moving towards the upside. So despite having the DXY as confluence, GU is not something that I'll be looking to trade probably today, to be quite honest. I'll be quite surprised if the pound will move to this length towards the upside. With that said, let me jump over to the news because there is a lot of red news coming out in an hour. I hope that most of you guys will still be sleeping by this news comes out anyway, and then you'll be able to come to the charts, and you will see that price has moved dramatically anyway. So in an hour, we've got some red folded news for the pound. Let's see how that shakes the market, but failing that. New home sales, I don't really see that moving the market in terms of the DXY. But we'll have a look throughout the day. In 9 hours' time, that's coming up. So a bit of news to take into consideration within the next hour or so. So, in terms of the short position, it will be for me only up at those highs. The reason why, I'd like to understand if or like to see Asia range being available as well by the time that happens. I'm going to have good confidence to look for a short position. The fact that Asia is available, I like the fact that we can clearly see from that 15-minute time frame that we have made a low from here. So of course, pull back for the lower high, lower low continuation. Would that make sense? Yes, disregarding the EMA's 15-minute time frame only, that makes perfect sense to expect that. And now if we also look at the Asia range criteria, then that aligns up quite nicely. So if we are going to start building the bias for that trade, what I'm able to do is say daily timeframes. This is what I didn't do before because I didn't feel like it should be done. But to build the bias up for looking at reasons for shorting from this area, daily order block in support short with the daily and the 4 hour 50 EMA. When you refine that area down, we want to be right up at the highs of that daily order block. So here was an order block available that is now, is it mitigated? No, it's actually available if I draw it correctly. And when you refine this 4 hour order block down, here we are. So it's exactly where we looked at on the 15-minute time frame. So even though I was reluctant, well, of course, I was reluctant to do that because I wanted to use just the 15-minute time frame only to show you guys how powerful it is when you can understand structure. However, when you start to put the higher time frame backing into it, of course, you can then start to build your confidence. So you could take that as 15-minute only based on age range, based on the fact that 15-minute is trending beautifully, lower lows and lower highs. Or if you really want to, you could add that in as higher time frame directional trading. However, we're not really at, let's say, the highs and the lows. I.e., that daily order block didn't do too much in the market. You could argue that this 4 hour order block certainly broke structures to the left-hand side, but the argument is, well, this is the move. That's the pullback. That's the higher time frame play. So this is just intraday perspective trading, hence why 15-minute time frame only is very good indeed. So that's all I have for you, to be honest, team. We're kind of in the middle of no man's land. I really want price to pull down into this 4 hour order block, and then I'll look to add the analysis as and when that happens. So let me place an alert down here. And with that said, yesterday was a bit tricky because none of my alerts were working remotely, and I was away from my laptop for a considerable amount of time, and just nothing was happening. So I'm not sure why that was, but nevertheless we managed anyhow. So that's GU. I quite like the GU short. And as I've said, I'm just not going to be looking at taking a reversal position to the upside. Sorry, just had a message come through. Just a second. What's going? 2 seconds here. I'm just gonna have to pause this. Okay, back in the room, everyone. Yeah, so I hope that makes sense. Well, I won't really be taking, well, I definitely won't be looking at a reversal type of position. Um, but I will sit and wait patiently for this short position up at the high. So that's GU for us. So have a look at GCAD. GCAD, nice. Okay, so GCAD, we expected a pullback after that high in the market. That high then created a weekly order block, the only order block that was actually available. Refine that weekly order block down. You see exactly where we are. And we closed below the daily 50 MA yesterday. So again, there is risk immediately in looking at taking that long position. However, it's unfortunate. It's probably best to leave GCAD and wait for just that a bullish candle above that area. However, we'll look at it because it does make sense to still take the position, and if we're able to do so, look to manage. The only reason why this becomes slightly more annoying is because what you'll be looking to do is wait for those breaks of structure. But what that break of structure is actually going to do is push price into that daily 50 MA. Then when price comes back, we'll be expecting a rejection towards the downside. So what that could be is, although we have the confluence of the break of structure, we'd actually be entering on the rejection of the EMA itself. So it's it's not where we want to be really with GCAD. But we'll talk about it because it is still a position that I'd be happy to take. But what I'd be happier to see is price continue to move towards the downside. And that's why I've got this 15-minute order block below the order block as well, below the 4 hour order block, all the way to the left-hand side. Yep, I have scrolled all that distance across just to find it. So here is a 15-minute order block. Yes, it has been tapped, but I'm not going to be looking at taking this position aggressively anyway. So what I'll be looking to do is, once we get back to price action, so the thought process then is that we will have price move lower. Now I'm drawing the 4 hour candle. Once we then hit the lows of the 4 hour order block and tap into the 15-minute order block, I then want to see a break of structure, pullback, and rejection of the 4 hour order block towards the upside, leaving us with a wick. At that point in time, we will be at the daily 50 EMA with the mindset that we could now be rejecting it towards the downside. So we'd be forced to manage that position. And then hopefully, I know that we shouldn't really be using the term hopium while we're trading, but it is what it is. We then have price move towards the upside, which will be breaching that daily 50 MA. And then hopefully at that point, that would be the take profit. And then by the time price then wants to start rejecting the daily 50 MA towards the downside, we'd already be out the trade. So that would be my thought process on GCAD. I still want that to move towards the downside. Hey, Boris, very good morning, my friend. Sorry, I was a little bit later than scheduled today. I started 15 minutes later. We are almost there, but there could be some good value for you to still take from it, take from the session, the fact that you're here live. So good morning to you, my friend. So what I'll be looking to understand on GCAD is hopefully can we continue to move lower? Once we then move lower, we have the better range to the daily 50 MA where we'd be expecting price to reject towards the upside. If that doesn't happen, I would really be quite reluctant to take it based on that daily 50 MA. So what I'm saying is if price now breaks up towards the upside and gives us that confluence potentially for, let's say, a reversal position, but based on higher time frame directional bias, as I've mentioned, on the way back down, it could now be rejection of the daily 50 MA. So if we have that, I'm going to be forced to add confluence into that position because I'm just not certain about taking a long position on the rejection of the daily 50 MA. So we break above a structure point in the market, we leave an order block behind. We reject the daily 50 MA towards the downside, and price comes back to the order block that caused the break. what I'll then be looking to do is have myself a 50-minute bullish candle that allows me to have a 15-minute order block. So it's going to have to be an not necessarily bullish engulfing, but a bullish engulfing will definitely give me a 15-minute order block left behind. And then once price comes back, that bullish 15-minute order block will break. A bullish 15-minute candle or bullish engulfing 15-minute candle will break the structure points on the way down by way of 1 minute time frame, and I'll be looking for a 1 minute aggressive type of entry like so to take price back up. So that is honestly based on the hope that the daily 50 MA is going to fail us. And with that said, trading alongside the 15-minute time frame, the reason why I'd be happy to take that position or slightly happy to take it is because if I wanted to trade this position short based on what price is doing at the moment, then my short entry is a lot higher than where I am anyway. Although this is a structure point in the market, I wouldn't sell GCAD from this 15-minute order block. And I wouldn't sell GCAD for, let's say, from this structure point if there was a 15-minute order block there now either. The place on the market where I'd be looking to sell GCAD is right there up at those highs, based on the 15-minute time frame only. In addition to that, if I was going to look at trading GCAD based on a higher time frame directional position, probably around the same area, but I know the better position is going to be right there up at these highs, from that 4 hour order block, which I can say has clearly broken those structure lows. So GCAD could well be a position that we just anticipate towards next week. But if it materializes, more so from the lows, I'd be happier to take GCAD on the 15-minute time frame down here. Look for a break of structure on that 15-minute time frame. So what I'm asking a lot in the market, I want price to show me a nice bearish trend into that area. We pull into the 15, we pull back, then here we go, and up we off to the daily 50 MA to tap it for the first time. So that's really where I'm at with GCAD. I like the setup, but I don't like the EMA placement, particularly on the daily. So I'll be happy. I wouldn't mind seeing it leave without me. Or what that would do is just solidify next week. Then once we get a bullish daily candle out of that daily order block, then re-breaking above that daily 50 MA, then I'll be happy to take price on the pullback, and that'll be a nice looking higher time frame position, and we'd have the backing of the daily 50 MA as well. Now, of course, the reason why I wouldn't mind taking it is I can see the imbalance in the opposite direction. So for me, imbalances look to be filled. That's essentially an order block, this candle just here. So I do know there is range from current position up to those highs before then you could anticipate a drop. If I place that on the chart, we are probably by that 15 minutes order block. Exactly. So there is definite reason to want to take price up to those highs. Just want to have good reason to do so. So there's a couple of thought processes there, and I'll just be waiting for either one of those to materialize. And depending on what else is on the market, perhaps I will look to take GCAD towards the upside. It doesn't look too bad. It's honestly just that daily 50 MA that I'd much prefer to be onside than offside. That's GCAD for us there, team. US dollar CAD. So let's have a look at US dollar CAD. So yesterday we came into that session low. I was waiting to see if we had a bullish engulfing candle. We had a bullish candle. It didn't engulf anything, mind you. It did leave an order block behind. So that's what I was just explaining on GCAD. A 15-minute bullish engulfing candle will definitely leave you with a 15-minute order block, but so can a bullish 15-minute candle. But the engulfing for me is a much stronger play. because the engulfing then would have broken all structure points to the left-hand side. Let's say if we did have this 15-minute candle like this, print like that, then I'd have the security that we've broken all structure points to the left-hand side. It's unfortunate we didn't get it, and price then didn't come back for me to look for that position anyway on US dollar CAD. So from the session lows, always a powerful play, but like anything, I still want to see some confirmation coming out of those session lows, particularly when we're just in a 15-minute point of interest. If we had 4 hour point of interest backing from a session low, then of course I might well be, well, I'm always more aggressive when I have the backing of a higher time frame directional position. When I'm just looking at 15-minute only, if it's not an Asia range, then I'm going to need to see at least a bullish 15-minute candle come from the area and then look for price to have broken structures by way of that 15-minute candle and then look for another 15-minute order block. So I just didn't get that. So unfortunately, I wasn't able to take UCAD longs based on the 15-minute time frame. And then up at those highs, price came into the 15-minute order block beautifully. So it probably could I have said there's a bit of negligence on my part. Could have been a little bit more aggressive considering we have broken structure points to the downside. But again, there's always a time and a place to take an aggressive position. UCAD, it probably wasn't up there with my favorites yesterday, hence why I didn't take it aggressively. But where are we today? So again, higher time frame weekly order block, looking for a price to come out or move towards the downside. We've got room back down towards the weekly 50 MA for the rest of the day. And if I have a look at the daily time frame as well, we have some distance to move back down towards that daily 50 MA where we can see most recent candles have closed above it. We are rejecting it. Therefore, if price wants to return back towards that daily 50 MA, of course, I'd be expecting price to reject it towards the upside and potentially move up slightly. However, with that said, yeah, that's going to have to be the most restrictive area, unfortunately, is the daily 50 MA. So where are we with that daily order block? So that daily order block, has it done anything? Well, it's certainly proven itself by way of being supported towards the upside with the daily 50 MA. So we don't mind looking for potential long position from those lows. However, where are we in the here and now? We're around the 4 hour 50 MA. Let's have a look. So there's nothing that I'd want to be getting involved in this area based on higher time frame. There's just nothing there for me to look to isolate by way of 4 hour order blocks. So definitely we still have a nice trading range towards the upside and also trading range towards the downside, supported both by daily order blocks and refined 4 hour order blocks within those areas. So it's quite clear the better opportunities where I want to be trading from and to. However, if we have a look at the 15-minute time frame to see what's gone on. So we had a high in the market created, no order block, but we had a session low, or we called it a structure point because there wasn't any order block. So therefore, when price came back down, needed to have an order block to start playing with. We had an order block eventually. It's been created now, well, yesterday, which we can now look at now, and that's where price is. This order block seems very large based on what I'd be looking to do. And from this order block, what can I say has happened? We haven't made new highs. We wouldn't really be expecting new highs, but what we have done is broken some immediate structure points to the left-hand side. So unfortunately, again, because we haven't made, let's say, a higher high from that area, I have to be a little bit tentative when price comes back. I may not wait for a 15-minute candle closure. I'll make the decision now. If price comes back down to the session low, where I would really expect price to want to come back down to, I'll just wait to see what happens from the area. More often than not, I am going to want to see that candle from the session low. In fact, I'll make the decision now. I do want to see that candle from the session low because I recognize when it happens, it's a very simple process. It's done like that. You wait for price to return and off you go. So I'll be looking to take potentially that from the session low. It's definitely not my favorite of the day. I feel like yesterday would have been the better opportunity if it had arose to take a long position from here. As a result of that higher low, looking for the higher high. Now all I'm seeing really is not too much going on. So I think the highest degree of entry criteria that I'll be looking for. 50-minute order block to be created, and we'll see if that 50-minute order block has broken structure points to the left-hand side, which would need to be engulfing. And then if there really is nothing else available, then I might consider it, or I might just consider saying no to UCAD because it doesn't look like the cleanest structure anymore on the 15-minute time frame. However, with that said, if I then get a break above and then this order block, this larger order block is available, then let me have a look at the range of that order block to see if it's something that can be done. GCAD maximum of 20 pips. So yeah, that's certainly doable. If we get a break above, and then I'll be looking for my 1 to 3 up there with that type of position. Where are we? Yeah, so that would be 15-minute time frame only. Failing that, everyone, there's really nothing on the higher time frames that we can look to, well, I can look to get involved in. These are my highs, or rather highs and lows are just really honestly waiting for a price to get to those areas. But what we can say is along the way there, so when you zoom out, you can understand what's going on even more and reason for wanting to have a look at 15-minute only so we can see where price is making those lower lows and lower highs, lower lows, lower highs, etc. We then had a high, pull back into an area, higher high, higher low, higher high, higher low, looking for that higher low. So we haven't had it, and excuse me, we're searching for that higher low for the higher high. Haven't had the higher high, but we're still respecting those session lows. So my thought process is that, well, we may well be on our way to gravitate back up towards these highs. If we then have a break of structure in the opposite direction, then this will bring this order block back into play. And to say, for example, now, well, we were making higher highs and higher lows. Now we've had an area in the market's been broken towards the downside. After a low, expect the lower high for a lower low continuation. So I'm happy to trade it either way back into my higher time frame directional positions, but I really just want some security there because as a result of not having that break, it's difficult to say what direction price is going to be looking to go in now. Are we going to break towards the downside pullback short or towards the upside pullback long? So that's what I have at the moment, their team for US dollar CAD. And then US 30, we'll take a quick look at US 30. We said yesterday that US 30, my higher time frame, or the better position would be the short from those highs. Well, price certainly shorted, but it never came towards those highs. So let's have a look now to see what's going on. Where are we? Cool. So weekly time frame, we're just incredibly bullish. And that's fine. We're going to be looking to trade, let's say, the pullback after the high, higher low for the high, high continuation. We said yesterday that we had this daily order block, the only order block available, and it was created by way of bearish gold or bearish candle. Prices moved on somewhat, and yesterday was a better day because we've had this bearish engulfing candle that took out price action to the left-hand side. So I can look to start that process again, which hopefully would bring us a little bit closer to price action to have something more reasonable to look to trade from. So when we refine that daily order block down, where are we? So we're in this area, new time, new price action from yesterday. And let's have a look to see if we can refine that area down. So up at those highs, nothing's available. No 4-hour order block available there. The only 4-hour order block that is available for me personally is just too low from where I would like price action to be. But I'll put it in so we can have a look where we lie on the 15-minute. And we're in there. So we'll have a look to see in and around that area to see why we could look for potential positional shorts. But for me, well, 15-minute only, price is just making those lower lows and lower highs. So instead of me looking at this as a higher time frame directional position by way of 4-hour order block, what I'm just inclined to say is, well, this is 15-minute only, and let's understand what criteria needs to be met for a 15-minute only type of position. So looking at continued shorts then perhaps based on the 15-minute time frame, let's have a look to see if we can read it. So it's very evident for me, lower low in the market, lower high, lower low. And we're looking for a price to want to potentially pull back into an area in the market which caused that low. So here is the highest 15-minute order block. But what I'm inclined to do is stretch that slightly larger to make it make better sense. And then here is a 15-minute order block, in my opinion. So if I'm going to be looking at taking this as an Asia range, would I consider it? Yeah, I would. I absolutely would. look at taking that as an Asia range. So Asia range is available to those lows. Then if price is not going to fill Asia upon London Open, I'll be looking for price then to pull up to this 15-minute order block, wait for a 1 minute break of structure, 1 minute order block, look for the short back down to Asia. So I think that is a good looking position, to be quite honest. We've definitely broken structure to the left-hand side. Of course, there is a risk. There is Asia up at those highs to be filled. But for me, the question is, can I guarantee that the break of structure has come from either here or either this position? The fact we had a low in the market, which already broke structure, pull back lower low, I'm quite confident to give that type of position a trade. To take that towards the downside. The reason why I like it is because we do have clear, good range back down to fill Asia if it is available. So that's a decent looking position, in my opinion, and probably able to stretch it to around there for a bit of added protection. So yeah, I like US 30 in terms of a short position based on 15-minute time frame only. And anything else, I'm not really interested in because the 15-minute is so very bearish, because yesterday's candle was bearish, 4 hour time frame is bearish. And looking to the left-hand side, there's no real evident places where I should be looking to place some order blocks to support long positions. I'm just going to be at the moment waiting for price to come back down to this 50, this daily order block down at the lows. Now, I know the daily 50 MA is there, but there's just not a lot there. So although we are expecting a reaction from that daily 50 MA, there's just no real reason for me to look for a position from that area, unfortunately. So US dollar, US 30, the only position that I'd be quite comfortable to take would be 15-minute time frame only, Asia range type of short position, up at the highs for a higher time frame directional position. And then failing that, what I'm going to really need to see is some newer price action develop for me to start building a bias up if we do reject that daily 50 EMA, to start wanting to trade alongside the overall bias, which is, of course, bullish on the weekly, bullish on the daily. And we're just getting those pullbacks now on the 4 hour and 15, where we're looking to just ride the intraday trade towards the downside. So that's all what I'm really interested in there, team. So we'll go for a bit of a summary. DXY, potential for a short move, back down into that daily 50 MA, 4 hour time frame looks good, potential range. If it wasn't a range and we've made a higher high, and then we're expecting a higher low before a higher high continuation, perhaps from that 4 hour 50 MA and 4 hour order block. But with that said, if we have a look at the daily time frame, could that well be a range? It could be. It could also could not be, based on the fact that the 4 hour 50 minutes is now being respected, and so are those 4 hour order blocks. So what that is saying to us is, hey, there could be some room for weakness on the DXY. There could also be good room for some strength coming from that 4 hour order block refined 15-minute point of interest. So with that said, if we're looking at immediate short positions, perhaps on the DXY, are there any reversal positions on AU, EU, and GU, or even a short position on US dollar CAD? So AU, if we're looking at DXY moving towards the downside, then we can expect AU to want to move towards the upside. Of course, we're now looking at structure points on AU to see if we can have price breaking towards the upside. 15-minute order block is already available, and then we'll be looking for price to move towards the upside based on DXY weakness. So that's the thought process at the moment. I wouldn't mind that position at all. Looking at EU as well. EU, slightly different because, in fact, we have more confluence on EU because for me, EU is in a daily range. We're at the lows of the daily range, and the way that I approach the range is simple. Wait for some structure points to be broken, pull back 50-minute point of interest, and off we go. The caveat to that is if I'm wrong about the range and we're respecting EMAs, then the range should be man or the trade will be managed for me by the 4 hour 50 MA and with the thought process that we could potentially fill the highs of the range. But by the time you get to the 4 hour 50 MA, probably going to be in some significant profit. So I'll be thinking about closing that trade out. Anyways, that's my thought process with EU and of course 15-minute time frame only. I can't really decipher where there are lower lows and lower highs in this leg. So for me personally, before looking at taking a short position, I'd have to want to see price want to pull back up to these areas before looking at the short because it's just a bit too difficult when price is moving in that manner with no clear lower lows and lower highs. Where can I put my order block to support my 15-minute time frame only? But what I can clearly see is a break of structure has happened and it's from somewhere up at those highs. So until price returns through my alert, I'm not going to be looking at any short. I wouldn't mind a long position based on the range and based on a reversal using the DXY weakness as a confluence. GU. Also looking at the same, I'd be happier to take a short position from those highs based on 15-minute only, based on daily order block that was created as a result of yesterday using the daily 50 MA short. However, the caveat to that is the weekly 50 MA is looking to reject towards the upside for the week. So there's a bit of conflict going on there. And then the same question, well, if we're expecting DXY weakness to come out of the market, perhaps in the immediacy, would I be interested in taking immediate long positions? I don't really have a place in the market where I would be looking to take a long from. So what I do have is a structure point in the market, nevertheless, and we just explained that if you're able to get something like that into the 15-minute order block, then it could be something you could consider with the thought process that you're trading back up in towards that area. So you'd just be trading that lower low, the lower high extension for the lower low continuation. But as I said, GU is not something that I would prefer to trade. For me, I'd much prefer looking at AU or EU. And then GCAD, as we just went over, we're in a good position. I just want to see some confirmation come out of the market. The caveat is the fact of that daily 50 MA pushing price to the downside. So what I want to happen is create some range. The way to create range is I had a look to the left, 15-minute order block below the 4, hoping that price is going to break these areas, come into the 15, then reject the 4 hour 50 MA, and we'd have our break of structure, look for the pullback into the daily 50 MA where we can then look to manage that position because we can expect reaction from it when price starts to breach through that daily 50 MA. Grab the profits if they're available because we'd be expecting the daily candle to then want to turn bearish and close below the daily 50 MA. So by the time we're through the daily 50 MA for the first time, I'll be looking to take profits off the table if that position materializes. So that's GCAD. And then finally, US dollar CAD, which we went over just now about how I'd be looking to take the positions to the better areas, but I want to see price break up, pull back, or break down, pull back, and trade price towards those higher time frame directional areas. And then US dollar 30, that is just that Asia range looking position, 50-minute only, alternatively higher time frame directional short position from those highs. Failing that, nothing else for me to look at on US dollar 30. Well, team, Boris, thank you very much for joining. I hope I didn't wake you up too early. But nevertheless, everyone,
Thank you.
all good, good stuff, my friend. And yeah, I hope everyone has a good trading day. I'm available pretty much all day as well. So yeah, if there's something to discuss, then I'll absolutely discuss it. Yesterday, pretty much after that break-even position on GU, I was probably feeling a little bit too sorry for myself. The price just moved in the direction that I wanted it to go on most of the pairs, but I just wasn't able to grab the pullback, unfortunately. And me and AU have a bit of a relationship where I just feel like I'm chasing it around. But we're patient, so we'll wait for price to pull back and we'll see what's going to go on. So, all the best, team. Boris, thank you as always for joining. Appreciate your attendance, my friend. Have a lovely day, everyone. Take care. I'll speak to you all soon.